Hello, Maverick traders. Welcome out to your market roundup November 27th. Hope you had a nice Thanksgiving weekend, and let's get to it. So as always, we're going to look at the markets and what news is meaningful, what's moving markets one way or another. We're going to look at the internal technicals, what sectors and areas of interest, and then always try to highlight the very best ideas, bullish, bearish, or neutral.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So for today, I would call it the pause after what's been a tremendous run. The last three trading sessions, we've just kind of been meandering sideways. Today was more of the same. Dow, S&P, NASDAQ, Russell, all sideways. Oil was down 1.2%, gold up 0.67. I didn't do the roundup last week because of the holiday, but 2 weeks ago, I do these on Monday, we talked about how in the commodity space, gold looked like a buy, but we wouldn't trust oil, and that has held true. Oil continues to lag, and so in the commodity space, gold is clearly the shinier object, the one that is rallying, the one that has relative strength. On the daily news, not a huge surprise. The consumer comes through again. Black Friday, Cyber Monday, record sales. Mounjaro, the Eli Lilly weight loss drug, there's studies coming out that are saying it's more effective than Ozempic at long-term weight loss, keeping that off, and other things that it might be helping with. Are these really miracle drugs? Well, it's interesting data coming in, and certainly Mounjaro is showing some signs that it could be even more effective than Ozempic. So these battles continue, but that is an area that has corporations concerned if they're selling food items, and certainly on the weight loss drug side of things could be a huge moneymaker for these corporations. Now, advanced decline line, about 60% of stocks going down, but again, it was a quiet sideways day. The 50-period moving average continues to turn into this nice bull market. We have 70% of stocks now trending higher. Let's take a look at the market. So where do we go from here? Well, we've clearly been on this huge rally, and we've come back up towards these highs, this kind of resistance zone, and that's where we've stalled. So if you just look at the levels of resistance here, we're just bouncing around that zone. We've done a nice job of a big rally, and we're allowing some moving averages to catch up. We could go sideways to allow a catch up, or you could mean revert and come and meet it that way. I tend to think it's going to go sideways. A lot of times when you have such strength, they don't give up that strength quickly. So meaning it won't just flatline, but you go up a little, you go down a little, you go sideways, and this just keeps progressing up and underneath. If you look at the NASDAQ, we are just below the all-time highs, but again, this breakout above resistance, and we've just continued. This was a nice breakout on volume, big gap, everything you kind of look for a technical break. And these markets, as we've talked about, we're in a bullish run. I've been leaning bullish. I've said I think we rally into year end. The animal spirits, the underperforming fund managers and so forth chase to the upside. That is historically what happens, and it's happening again here. So as we look at the heat map, a couple of interesting points. Look right up here at Eli Lilly. The data, the news that came out was just overwhelmingly bullish. The stock was down 1.6%. So what does that tell us? Well, it tells us that a lot of that was already priced in, and it's one of those things where quote-unquote good news, bad price action. I'd expect Eli Lilly to actually back up a little bit more. Just in a short-term trading environment, talking about a few days, I think it gives a little bit more ground, probably pulls back a little further in price. Now, that could be a buying opportunity, but an interesting note there. Everything else was just more of a mixed picture. You know, there's a couple of little spots of green or brighter red, but that was really one that stood out to me on the heat map. Now, 2 weeks ago, I really flipped a switch and went bullish on gold. One of our highlights was GLD. One of our highlights was GFI, which is a gold miner. Here I'm going to highlight another gold mining stock, and this is an area of interest to me. On the bearish side, CVS and WBA, those are correlated. Those are very similar companies. CVS Caremark, Walgreens, they're lagging, vastly underperforming. So let's look at some names. Here's a gold mining stock. Again, we've pushed up to that resistance. And if you've been playing gold to the upside the last 2 weeks, you've been happy with the results like we talked about. GFI or GLD, they were both great buys and have certainly worked higher. I suspect that this is breaking out. I think there's more upside, not less, in the gold markets. I mean, just the characteristics of this, sort of a cup and handle-y type of feel, or an ascending triangle, whatever you want to call it, it is bullish, and the volumes picked up today as we broke to new highs. Zion's is a little bit more of a bearish to bullish reversal idea. Here we have one of my favorite possible buys. Now, it's a quick exit if it doesn't set up, right, or if it doesn't hold, but when you pull back to the 2050 moving average after a bullish cross, this is just the area where a lot of times you can then push to a new high. Again, this is not a runaway bull market, but you have some characteristics of flatter resistance here along the top, rising lows, and this can set another higher low and push right back up to the resistance and then some. So it's a little bit of a speculative type of trade in that if we break this level, imagine you just gap down tomorrow morning and start to break down. You wouldn't even be in the trade. The only way we get in is if it starts to pivot upward. And if it fakes us out, if it starts to pivot up and then it reverses and comes and breaks this, it's a quick, painless exit. It's a small loss, but I suspect this could be a good technical area. On the flip side of that, similarly, you have bearish crossovers in CVS, you have downward trends, downward sloping trend lines, and you have a bearish reversal today. So to my eye, CVS looks like we may be on a path back down here towards the lows and that $65 area. That and possibly even lower than that. So CVS looks bearish, acts bearish. If it walks like a duck and talks like a duck, that sort of idea. And then Walgreens, even worse, already at the lows and quite possibly leading by breaking further to new lows. So this is just an area that continues to be weak. It's down, making new lows in what's been a great market environment, just relative weakness, right? Volumes picked up, and I suspect we're going to break that $20 level, which they've tried to defend. They defended it here and they defended it here. It's a psychological level that have the stock hold 20. I think it's about to give up that price zone. So seasonality is bullish. Precious metals, if you're playing the commodity space, has been so superior to oil. I kind of joked, I had this bet early this year. I thought oil would be up for the year. Rob said bearish. Oil was strong-ish all year, kind of up for the year, up for the year, up for the year, and right here towards the end of the year started to give up the ghost a few weeks ago. And I mentioned at the time this is probably very bad for my bet with Rob, but very bad and negative for energy and just not a place you want to be in the stocks. I've personally highlighted Chevron and Exxon and these types of names for bearish trades over the past few weeks. Oil, it's just a bearish area right now. Now that's great for the economy, that's great for the stock market as a whole, but not good for the energy sector. Core PCE on Thursday, that is the Fed's preferred inflation gauge. And then Powell speaks on Friday, and he'll no doubt be watching and looking at that data and then maybe speak to that in terms of their policy and expectations going forward. We've got CrowdStrike, Salesforce, Dell, Dollar Tree, Snowflake, TD, I don't remember Toronto Dominion, I believe it is. But anyway, a lot of different corporations reporting earnings that are still going to have impact on those companies specifically. So if you're trading any of those names, be aware that they're reporting this week. Have a great week, everyone. We'll see you next time.